So give us a sense. It looked at the markets this week sort of reflected exactly what we were talking about. Some good news, some bad news. They didn't know exactly where to go.
Well, I think the short-term outlook is that dark winter that is very frightening. So certainly we can look forward to a far more positive spring and summer with broad distribution of a very effective vaccine or vaccines. We do have that short-term pain. And I think it's basically what we saw this week was the stock market working through that and weighing it, both the short term and the longer term. And what we got was a negative week, but keep in mind, that's following on a very strong rally that we've seen over the last few weeks.
It feels like we need sort of a bridge, as it were, to get from here to that vaccine whenever it may come, maybe in the middle of the year, perhaps. But what do we need for that bridge? I mean, let's come back to stimulus now. How badly do we need that stimulus?
I think you hit the nail on the head. We need more stimulus. And I think there was a perception today that we might not get as much stimulus. And that's why Secretary Mnuchin was interested in having the Fed return some funds that had been allocated but not used for different lending facilities. And I think that spooked markets a bit because it in my estimation, reinforced the idea that we may not see additional fiscal stimulus. Now, of course, Secretary Mnuchin and congressional leaders are working on another package, but it's unlikely to be what is needed. It's unlikely to be anywhere near that $3.5 trillion HEROES Act passed by the House of Representatives all the way back in last May. And it's unlikely to have that state and local government funding that is so needed.
Kristina, that's the markets overall. What about within the markets? Talk about some specific sectors, because it looked like, at least at times this week, once again, we had tech sort of selling off a little bit, softening a bit, and people going back into cyclicals.
Well, David, what we also saw in addition to that weighing and balancing of the longer term versus the shorter term was also evident in sector selection this week. On days when the stock market was more positive and was looking ahead to the vaccine distribution and certainly a big improvement in the economy, those were days when we saw cyclicals outperform. And on other days when the market was more preoccupied with the shorter term and all the difficulties that we face in the coming months, that's when we saw defensives and secular growth outperform. And I expect a continuation of that seesaw between cyclicals and defensives to continue, at least for the next month.
The good news clearly this week, I think, was that it looks like we will get a vaccine. Not exactly sure when, but we'll get a vaccine. There really is hope. At the same time, how big a risk do we run of really permanent damage, scarring as they call, of the underlying economy in order to get to that vaccine?
I think we absolutely run a very significant risk of very long-term damage. And that's why we've heard Fed Chair Jay Powell, as well as other Fed officials, really, pounding the table about the importance of fiscal stimulus. Really, what we learned from the global financial crisis is that if you don't have adequate fiscal stimulus, it takes a lot longer for an economy to recover, and it tends to have more imbalances. We saw a lot of wealth inequality emerge coming out of that global financial crisis. That could easily repeat itself this time and actually be a lot worse. We've seen that K-shaped recovery so far, but it could get worse, and we could lose a lot of businesses and people could lose a lot of jobs that aren't going to come back in the near term if we don't have that adequate fiscal stimulus.
Kristina, we talked with Dallas Fed President Rob Kaplan. We'll hear from him a little bit later in this program this week. And he said he's concerned about the fourth quarter. It's unclear what the fourth quarter is going to be. And the first quarter, he didn't rule out the possibility of even going back into a recession given where we're going.
Well, I certainly think that it is going to be rough going for the next month or two, because even if we don't see widespread lockdowns, we're likely to see individuals change their behavior and to a certain extent self-quarantine. That is not going to be good for the economy. And especially in the absence of adequate fiscal stimulus, we certainly could run the risk of a recession. I don't think that's the most likely scenario, but it's certainly a possibility. Having said that, though, we do know we have a lot of certainty about 2021. Just a few months ago, we heard medical experts tell us they weren't even sure if we could come up with a vaccine for a coronavirus. Now we have two vaccines that thus far have proven to be more than 90% effective. And they seem poised to be deployed at some point widely in 2021. We also, of course, have certainty around the presidential election, around trade policy, all kinds of things that we didn't have just a few weeks ago. So, from my perspective, this means that 2021 is going to be a lot better than 2020 in terms of certainty and predictability. Now, of course, that's a low bar, 2020. But it suggests to me that in advance of that, companies are going to start spending more. We know that typically when policy uncertainty goes down, CapEx spending goes up, and we're likely to see even consumer confidence improve in advance of that. So we do have some bad times to get through, but there certainly is some sunshine at the end of this.
Just very briefly, does that include jobs?
That includes jobs for sure. Just like we saw a rebound after we started reopening the economy this past spring, we could see a more amplified jobs recovery. But the amplification, the robustness of the recovery will depend on how much fiscal stimulus.